All right, let's talk about Welltower's Q3 2025 earnings call, because something pretty fascinating just happened. They delivered what can only be described as a blockbuster report, but the market's reaction? Well, it left a lot of people scratching their heads. So let's dive in. Because that is the central question here, isn't it? I mean, Welltower delivered a phenomenal quarter, and then they dropped this massive strategic bombshell on top of it. So why did the market just kind of shrug it all off? It doesn't seem to add up. I mean, just look at the disconnect. On one side, you have everything an investor wants to see: a classic beat and raise, incredible growth, and this really bold pivot deeper into their core business. And yet, after a nice little pop in the pre-market to around 190, the stock just completely reversed course and closed down 1.6%, on heavy volume no less. So to understand this, we really have to break it all down. Okay, first things first, let's get inside the numbers. And let me be absolutely clear about this. The fundamentals here are undeniable. The stock's weird fade had absolutely nothing to do with how the business actually performed last quarter. The strength was just everywhere. Normalized FFO per share came in at $1.34, nicely beating the consensus of $1.30. And get this, that's over 20% growth year over year. Revenue was even stronger, up more than 30%. So you see, this wasn't some minor beat. This was a statement. So, what was the engine behind all this growth? It was their senior housing operating portfolio, or what they call SHO. Same-store net operating income growth came in at a blistering 20.3%. This is the absolute core of their business, and it is firing on all cylinders. And here's the thing, this isn't a one-off. Nope, this was the 12th, let me say that again, the 12th consecutive quarter that Welltower has delivered over 20% NOI growth in this portfolio. That kind of sustained performance is, frankly, exceptional in any sector you look at. So the crucial point here is that management isn't just delivering right now, they're signaling extreme confidence in the future. They actually raised their full year 2025 FFO guidance to a midpoint of $5.27 per share. Strong results, strong outlook, you just can't argue with it. Purely on the numbers, this was an A-plus quarter, period. But believe it or not, the numbers were only half the story. On top of that monster quarter, management announced a massive strategic shift that, on the surface, should have only made the bull case even stronger. They unveiled roughly $23 billion in transactions designed to completely transform the company. And the strategy is crystal clear. They're selling off $7.2 billion of their slower-growing outpatient medical assets, and they're recycling that capital into $14 billion of their high-conviction, high-growth senior housing business. They are absolutely going all in. And they're doing it from a position of incredible financial strength. You see, they're largely self-funding this whole pivot through those asset sales and by tapping into their massive liquidity pool of nearly $12 billion. This isn't some desperate move they have to make. This is pure offense. So, we have these incredible numbers and this bold new strategy. But what's the big idea that's tying it all together? Well, management is calling it Welltower 3.0. And this is the key phrase from the CEO, Shunk Mitra. The vision is to transform Welltower from just a traditional real estate landlord into a tech-forward, operations-focused platform. It's all about leveraging data and their business system to drive performance, not just, collecting rent checks. On the call, Mitra actually compared it to Netflix pivoting from DVDs to streaming while the DVD business was still absolutely booming. It's a proactive, aggressive move to reshape the company for the next decade, not just for the next quarter. They're disrupting themselves from a position of strength. And to really drive this vision home, they're radically changing the incentive structure. The new 10-year executive compensation plan, it features a base salary of just $110,000. The vast majority of their pay is going to come in long-term operating partnership units. I mean, talk about an extreme alignment of interests with shareholders. This quote really captures the conviction perfectly. Management is betting their careers on this transformation. The message to the market was crystal clear. We are all in on becoming the dominant operator in senior housing, and we're going to be powered by technology and data. So, with a stellar quarter, a bold pivot, and a really compelling vision, we come right back to our original question. Why in the world did the stock fade? All right, here's our take. The bottom line is simple. This was not about the fundamentals. The negative reaction was purely a function of market mechanics, how people were positioned, and frankly, a classic case of information overload. Let's break that down. First, this was a classic sell the news event. The stock had been on a monster run, up 46% year-to-date, while the rest of the sector was only up 5%. Plus, it hit a 52-week high the day before the report. You know profit-taking was inevitable. Second, there was just complexity overload. The market had to digest a beat, a raise, a $23 billion pivot, and a radical new compensation plan all at once. That's a lot to process in one day. Looking ahead, these are the key signposts we'll be watching. The execution of those outpatient medical sales is absolutely critical for funding this whole thing. We'll be keeping an eye on the integration of their massive new UK portfolios, and of course, seeing if they can keep that 20% plus SHEO growth momentum going. So, given the underlying fundamental strength, the clear strategic vision, and the fact that this recent pullback seems technical, not fundamental, our rating is outperform. We believe the company is successfully positioning itself for a multi-year growth cycle. Now, for a bit of a wild trade idea. If you really believe in this Welltower 3.0 thesis, you could consider a pair trade. Go long Welltower while shorting a more diversified healthcare REIT. What this does is it isolates the pure play senior housing theme and lets you bet directly on Welltower's focused operational strategy, outperforming the more traditional, diversified landlord model. And of course, please remember, this is not financial advice.